Hello and welcome to Big Deal. I am Nisha Poddar. Now today we are going to focus in this era of digital revolution on the digital currency and how it's picking up pace. Now Reserve Bank of India has also introduced the concept of CBDC or central bank digital currency. So will it be a game changer, and what will be the impact on the transactions as well as capital management by all participants in the economy? Let's find out from our expert panelists today. Let me welcome on the show Cyril Shroff, the managing partner at Amarchand Mangaldas, and Neeraj Gambhir, the group executive at Axis Bank. Gentlemen, welcome to CNBC TV18. Neeraj, let me begin by asking you, as a banker, what do you think? Is the digital currency, while at a nascent stage world over right now, likely to become the currency of the future?
So over the last about 4,000 or 5,000 years, we've seen money change several forms. We started with, animal hides, cowrie shells, moved into metals, commodities, and then paper money. I think digital currency is the next phase. This is how exactly Reserve Bank has described it, that as everything else is becoming digital, money is also becoming digital. So CBDCs could potentially be the next form of money as we know it.
All right, that's a big statement coming in. Cyril Shroff, do you agree with, concur with what Neeraj said? And what are the highlights of the RBI's concept note and the way they have designed it?
I would certainly agree with Neeraj that this is the next phase of evolution, just as everything is becoming digital.
Yes.
That a digital currency is probably the next step. I'm not so sure whether it will, like in the case of prior evolutions of money, substitute whatever was the then status quo or not. We are more likely to see kind of coexistence of the digital currency versus the kind of prevalent paper money and others. But that only time will tell. So where we are today is that the RBI has put out a concept paper after the working group was constituted about 2 years ago. And the concept paper has been put out in order to prepare the thinking of the market. RBI has announced in the report itself that they are going to be running a few pilots, and that they are going to, this paper is put out so that the market can start getting familiar with the whole idea of a digital currency. And it's a brilliantly written paper, and I think it puts out what are its key motivations, some of the design choices that have been made, and why they have been made. The purpose that has been set out in terms of the motivations, they've set out 6 motivations, which include cost reduction, cashless economy, ease of cross-border remittances, financial inclusion, and last, but I'm not sure that is necessarily the last, is that it is an alternative to crypto, or at least to provide a kind of another way of thinking instead of the private currency or the crypto assets that are kind of so topical, but will come with their risk. So that's the broad where we are today. That nothing has been introduced here as yet. It's just a concept paper, but I'm pretty sure it will result, after legal changes are made, it will result in a new idea.
So Cyril Shroff, do you think that it is an regulated and government's answer to the rise of private crypto?
Certainly one of the reasons is that, but I think it has a standalone reason as well.
Yes.
For all the other reasons that we mentioned, because it's just a digital version of a fiat currency.
Right. So taking forward this discussion, of course, Neeraj, we know that the digital currency will have the sovereign backing, but banks will still be the intermediaries for servicing the CBDCs. That's the kind of concept and design that has been laid out by our central bank. What does this mean for the banking system, and how do you think the different approach between wholesale and retail banking under CBDC will work?
So I think much of the detail is yet to be seen, because conceptually they are saying that there will be intermediaries involved in the issuance and distribution of CBDC, even though central bank is the one who's going to be issuing it. My guess is that it could potentially take some kind of a wallet format where you're currently using wallets for commercial bank money, you're eventually going to be using wallets for central bank money as well. I do envisage a situation where once this is introduced and banks are the ones who are actually doing the account opening, because it's envisaged to be an account-based, CBDC. Banks are the ones who are doing the KYC, AML, account opening, ensuring that the wallets are given, and effectively those are the wallets which are being used. Maybe integrating those wallets into the existing applications that we have, the mobile apps that we have, so that CBDC becomes another way for you to actually make the payments, just as you do it with IMPS and UPI, for example, currently. On the wholesale side, I think the way the design is thought about is slightly different. It is basically supposed to be a direct sort of holdings through the Reserve Bank, and wholesale side could actually be more used for interbank payments and settlements between the corporates. One impact that we still need to see, and I think this will depend upon how the design is done, how it's rolled out, is that whether wholesale CBDC will have any impact on the current account balances. I think that the paper does talk about that we need to be mindful of the impact of this on the current account balances, because current account balances, if you know, are currently also unremunerated. No interest is paid on current account balances,
Yes.
and effectively works like a zero payment sort of account. So CBDC will be also something similar. So we need to see whether in wholesale space there is going to be a competition between the CBDC and the current account facilities that the banks give.
Right.
Like I said, much of the detail is yet to be seen.
Sure.
These are the broad concepts that are being talked about in the concept paper.
Right. So, Neeraj, one important question will be, how much will be the push by the banking system? What is in it for the banking system as far as benefit is concerned, apart from just being a service provider, to really push it so that the adoption is much faster? Because once the money is converted into CBDC, it doesn't account for your deposits. And on the other hand, you can't use it as a raw material for your business, while the deposit holder also does not get any interest out of the CBDC holding. So how prevalent do you think it will be without these kind of benefits to the banking system and to the customers?
Be mindful of. First of all, CBDC is being envisaged as an replacement, or rather something similar to the physical cash currency that you hold.
Yes.
It is not supposed to be a replacement of your bank account, right? And as far as the physical cash currency is concerned, there is a lot of involvement of the banking system in terms of distribution, currency chest management, ATM management, etc., and all of these things actually cost money for the banking system. So if we can actually move the retail users to using digital currency, then the system as a whole benefits, the banking system as a whole benefits, because those costs can potentially come down quite a lot.
Right.
The second aspect of this is that from a user perspective, from a retail investor perspective, they're basically now, instead of holding money in their wallets, they're going to probably be holding money in a form of an app into their mobile phones. So the convenience value actually increases. And CBDC, like any physical currency, is effectively a central bank liability. So effectively, there is no, credit risk that you take of a bank, or, the risk that if tomorrow, if the bank was not there, what will happen to your money? It is being envisaged that the retail CBDC, and I think wholesale as well, is going to be non-interest bearing instrument. Pretty
Yes.
much like the cash that you carry with today.
Yes.
So in that sense, there is not going to be a material difference between the cash that you carry in your wallet or your
Yes.
purse
Yes.
and the CBDC that is being thought through. So I think these are some of the aspects which will actually have a determination. I don't think RBI is thinking of a push in that sense. The idea is that you give customers an option.
Yes.
Those who want to use a digital form of cash
Yes, got
have
it,
this
Neeraj.
option and can then use it.
Yes. So it's an option. Let me delve deeper into that after a very short break. Cyril Shroff, Neeraj Gambhir, hold on to your thoughts on this very interesting discussion on understanding the digital currency of the future. Stay tuned to Big Deal. Welcome back. You're watching Big Deal and we are discussing the scope of CBDC or the future of digital currency. Cyril Shroff, we have touched upon a few aspects on the mechanism and what it can potentially do, and you think that it will coexist with other forms of currency. I want to understand that if we really were to have a borderless currency across the world, which can help in cross-border transactions, faster, less expensive and remittances, can digital currency really take that place? And what are the regulations and international coordination that is required for that to happen?
So I think the short answer to your question is, the answer is yes. But there are a lot of steps in between, sort of reaching from where we are today till then. For a borderless world where digital currency will work seamlessly, I think firstly each country will need to have their own version of a CBDC. The rules in relation to technology protocols will have to be worked out. Tax and the relevant foreign exchange laws of each country will have to be aligned for this. So I don't know what point of time in future it will happen, but if every country in the world or every currency in the world has this option, eventually this will get there, because this will result in the ability to make direct payments outside the banking system. And of course, that will carry its own risks as well. So necessary KYC and AML protocols will also have to be evolved. And a lot of it will depend on the design choices that have been made. So in the concept paper, RBI talks of three design choices. First, wholesale versus retail. I think they will do both. Then whether direct, hybrid or indirect, I think they've made a choice on going indirect. And a token-based or an account-based, it's likely that retail will be token-based and wholesale will be account-based. So all of this will finally influence the outcome, but there are it's a long journey with many regulatory and technological choices that have to be made in the journey. But in an ideal state, the answer to your question is yes.
All right. So Neeraj, as a banker, what do you think about the cross-border transactions and the remittances bit? And how can the digital currency really make that much smoother and less expensive? Do you think it's designed, the RBI's concept paper has been designed in that direction? And do you think that the international coordination is really taking place on that front? Or on the flip side, do you think that while it is only mirroring rupee, every country is just mirroring their own currency, and therefore the digital currency will also have the same forex hedging, the same remittance, blockages, and going through financial institutions and being, stopped by FEMA and various other regulations?
So to start off with a couple of points. Firstly, as far as the design choices are concerned, clearly easing off the international payments is one of the things that is there at the back of the mind as far as the concept paper is concerned. It can potentially be one of the major use cases for having a CBDC, besides potentially financial inclusion. In the context of CBDC, there are approximately 100-odd countries which are currently thinking about experimenting, wondering about how to go about it. And all of this is in some senses, being sort of, in some senses being mediated by BIS, which, as you know, is central bank. So there is some level of kind of thinking at each other and looking at each other and figuring out what other banks are doing that's happening across the central banks. There will need to be interoperability for us to have a smooth cross-border payment experience, but that is something that will evolve over a period of time. The one the one sort of defining feature is that we'll still have multiple currencies even in the CBDC framework. So which means that if you're going from India to, say, for example, Singapore, and you want to convert, you still will have to convert. There will need to be we need to make that foreign exchange transaction. But hopefully, in the context of CBDC, and given the fact these are electronic, instruments now, life will be a lot more easier, smoother, and less time-consuming.
As an international traveler, Neeraj, I can give you a feedback that, it's very difficult and an expensive proposition. And I was hoping that the new forms of currency will ease that. But if you are going to have different currencies, even in digital form, and the similar forex exchange issues, then we have to see how this really develops. But one aspect which, Neeraj, I know that you've been reading a lot on, is it really a half-hearted attempt by the central banks across the world to really fight back the rise of crypto? And I'll tell you that it's half-hearted. I say that because it's going to be regulated still. It will be less democratic, while cryptos really aimed for a real borderless digital currency.
In that sense, I don't think CBDCs are a complete replica of cryptocurrencies, or a complete replacement of cryptocurrencies, right? Because cryptocurrencies, by definition, are supposed to have no intermediaries, a trustless sort of a system, a decentralized system. A CBDC would still be, it'll still be owned effectively, or it's a liability of a central bank, and therefore the trust issues at the center of CBDC. I think what the governments, including Reserve Bank of India and Government of India, are trying to do is that to provide a more sort of safer alternative to public, which is obviously wanting to now use digital currencies in one form or the other.
Yes.
CBDC, because it will have a central government backing, or it's a government-backed instrument, I think has that, has that ring of safety to it, which probably the cryptos do not have, right?
Right.
So that is a significant allure of CBDC, if I may use it.
Yes.
But clearly, it lacks the uniformity and the fact that there is complete decentralization, or at least there's a theoretical complete decentralization that exists in the crypto world.
All right. And Cyril Shroff, another ethos based on which digital currency has been really conceptualized is to, replicate the cash economy into digital economy. In fact, no interest rate and anonymity are some of those features which gives it a digital prototype of cash that you hold in your purse. Do you think it will solve that purpose? Because, cash economy, where we saw the whole demonetization also that we went through, was to really curtail the cash economy, which is used for tax avoidance and for fraudulent activities.
So will it be completely anonymous? I don't know, because one thing that one does know about technology is that there is always a digital footprint somewhere. But based on the technological choices that are made, I think a high degree of anonymity will be achieved, and I think hopefully technology will help solve that problem. On your second point about interest, I think is an important distinction to bear in mind, and both from a crypto comparison or even otherwise, is that not to think about this as an asset in which value goes up and down, but it is really just a digital equivalent of a fiat currency. Like 1 rupee in a cashless, in a paper form should be equal to 1 rupee in a digital form. That's the way to think.
Right, but I would say as a user, I think money in my bank account, then how I can transfer through various wallets, it's much more effective in getting the benefit of the interest that I get on my bank account, however small it may be, Neeraj would know, but it will still be beneficial in the long run rather than having CBDC if that were to happen for online transactions. My final question to you, Cyril Shroff, what is the missed opportunity here that we are looking at from the concept?
So I'm probably a little early to assess whether there are missed opportunities or not. And these are really kind of flip sides of the design choices that have been made. For example, not having it as interest bearing, one could ask the question as to whether that means that have you really missed out an opportunity to sort of have a lot of innovation in the banking system, because had there been interest on digital currency, there would have been a competition between bank deposits and that would have forced the banks to innovate or not. It's a question, it's a kind of a moot question to ask.
That's
I think there's a trade-off in terms of really, monetary policy transmission and bank deposits. These are really counterpoints of each of the design choices that have been made.
yes.
And to be made as we get to the next level of detail. For example, when the exact technology choices will be made, there will be a number of trade-offs, and there could be some missed opportunity there.
Right.
There as well. So I think a little premature to assess what are the missed opportunities.
Yes.
But in any innovation like this, there are always missed opportunities.
All right, so we are just in the beginning of the digital currency journey. But Neeraj, just one word answer. In your view, how soon would we get rolling on this? Because the technological, innovation also is required at the back end of the banks for the system to work.
I'm expecting over the next 6 months, we will have some kind of pilot rollout where the banks will get to experiment.
Yes.
In a limited way, in a closed loop way. And
yes.
then depending upon how the pilot goes, the rollout could happen. Remember, China has been doing the pilot
right.
for the last 2 years now, right? So
right.
It could be a longer journey as well.
All right, but nonetheless, the journey has begun. The future of currency could be the digital currency. That's the view of the House. Thank you so much, Cyril Shroff and Neeraj Gambhir, for joining us on this interesting discussion on Big Deal. With that, thank you so much to all our viewers, and also happy Diwali to all our viewers and our panelists. It's going to be a festive season. Thoroughly enjoy yourself and keep watching CNBC TV 18. Thanks so much.